Good morning, everybody. It is currently 10:06. I had a very late night, as you guys know. I was trying to stay up for this England game, and I didn't even make it. I fell asleep at the kickoff. Had my food in the oven still from last night. Well, actually, it's in the air fryer. It's 2 a.m. So unfortunately, I was unable to watch the game, but I will catch the highlights later. And today we have news at 3 p.m. for USD PMI. So that would be 1 hour and a half after New York Open, which is in about 5 hours, I think. Yeah, 5 hours, 1500. So, oopsie. So, looking at the weekly timeframes, we've seen that DXY has broken structure. This was the highest range of the consolidation period. We've taken that liquidity. After we've taken that liquidity, if I was bearish, I'd expect a quick retracement back into that range. That did not happen. In fact, we had another candlestick. To be fair, we traded above this high here, or this open here, and we closed above this open here, and then we traded back down. But guess what? It only was just about into that range. If we're using this open as the kind of litmus test, the kind of core of the, I don't know why I said it like that, the core of the consolidation range is this box right here. And we've kind of used that box. I'll just use this high as the litmus test. We've tagged back into that range or the top of the range and rejected from it, closed above it. Now I'm expecting a continuation. A reasoning as to why I'm expecting a continuation, because this is a general pattern of a reversal. Number one. Number two, it also, we have liquidity here in the fact that we have this high over here, this high over here, and we also have these imbalances, mainly this one. So I think price wants to come back up, and then from here it can decide whether it wants to continue going up. Or like here, where it came up to this fair value gap. It's basically the same thing as here. You see this? We pushed up, we consolidated, broke that range, retested it, went up towards the fair value gap right here, and then created a swing high, and then we were bearish since then. Here, I'm expecting us to do the exact same thing. Come up to this area of fair value gap here, create a swing high, and then I'll be bearish again, targeting all these lows. But DXY were bullish. And then if we take that, we'll be hopefully looking for the opposite on the pairs that have USD second. So like with the two pairs I'm trading, EU, GU, I'm expecting the same pattern on the other side. So essentially I'll be looking for the same thing if I was to invert it. So this invert it. So this is DXY normally. You can see it has swoop, swoop. This is EU inverted, swoop, swoop. So I'm expecting EU to come down here. Now this is it inverted, right? Just to show you. But what that really means is that this is it normally. We're now looking for price to go down. So I'll be looking for sells on the weekly time frame. The same is true for GU, although the weekly price action is not as clean. EU is the cleanest. So if we go back to the daily time frame, excuse me, and then we can now look at where we are in the grand scheme of things. So we've broken the structure. There is this fair value gap. Now prices have to fill every single fair value gap, right? So for example, price had the fair value gap here. To be fair, it filled it. We had one here. It filled this one, came back into it, didn't fill it completely, and then left this one unfilled. And then from there, use that to catapult up. So the possible price uses this one to catapult up without using this one. So it's possible the price continues going up from here. Okay, so what does that mean? So we're looking for sells. We're bullish on DXY. GU actually looks better for sells, even though the weekly doesn't look as great. And the reason why I think GU is better for sells is because price has come up to this range here, which is a daily value. Okay. This was the order block. That's what that line means. Can we get rid of the stuff I don't need? Don't need that. Don't need that. Okay. And we're actually interesting. So here we failed to create high. and we're looking to break this structure. Now, when we're looking for the entry model, we're going to change it a little bit where we look for more impact. So one of the things I would look for away for is the sweep and then the displacement. I need to see a strong displacement very quickly for me to be interested. No longer we're going to do, oh, as long as I see a fair value gap in the breaking of structure, it's going to classify as an entry model. No, it's going to have to actually fulfill speed with this displacement. Because the more speed there is and the more or the stronger the displacement is. So by stronger, I mean the price range, the price gap. You can see this bullish candle here is strong. Why? Because it shifts in price from opens at 132,883 to 133,583. That's a lot of pips. So that's a big body candle. So we're gonna look for more of these larger. You can even see here, we have it here. So I'm expecting from this daily fair value gap a reaction. So we pull back into it. Now we would look for a big displacement move to the downside, number one. Number two, we'd also wait for or look for liquidity sweep. So from hourly time frame and above, I want to see a liquidity sweep. So we have a swing high over here. And not only is this a swing high, well, I call it RTH because it's filling a fair value gap. So for bearish, essentially, we shouldn't expect price to come above here. That's number one. Right. Number two, if we zoom in, I would like to be taking some bullish liquidity right here. We're just currently downtrending. I would like for New York to open and take out some of these highs before going back down. So that's from session highs. On the daily time frame, again, it's a swing high. And we've just, I mean, technically we could take this liquidity. That's the only way. Well, not the only way, sorry, but that's like the only valid way. But I can only expect price to come up here because it's close to the ITH. But then we could take today's high, which would be from, I think, Asia's high, probably. So taking out Asia's high, which would also classify as taking out today's high, would be a very good place to start. London failed to do so far. Obviously, London's kill zone is the time frame we enter on this model, but that time is basically up. So I'm expecting New York to open, taking out London and Asia before coming back down. And the main thing that I've changed and realized is you want to spend most of your time analyzing the daily time frame. And the reason being is because most of institutions are using this time frame, and things look so simple when on the daily time frame. And it's simple because the larger time frame takes a long time to happen, and when you zoom in, there's so much noise. But despite how the noise presents itself, the daily time frame is almost always true to itself. And so when you spend most of your time analyzing the daily time frame, you're doing two things. One, you are in alignment with the strategy of the fact that you're trying to copy smart money, or you're trying to follow smart money. If you're trying to follow smart money, the best way to follow something is to copy something. If I want to follow somebody to the shop, I'm going to copy how they walk. Not necessarily I'm going to be like an imitator, but generally speaking, I'm going to copy a lot of what they do. If they're walking, I'm going to walk. How can you follow somebody in a car by walking? You're going to lose them, right? So you copy them. You're going to do things at their pace. You're also obviously not going to have the exact same stride, which is where you get your own kind of strategy from, because you can't copy someone because they can only be taking up the same footprints that they take up. You can follow in their footsteps, which means you do very similar things, but you can never replace them. The only way you can replace them is if you put money in their pocket. Then your money's going with them at least. But anyway, I'm trying to get philosophical today, but my point is very simple, that you want to spend most of your time on a daily time frame to achieve two things. One of the things is that if for copying smart money, and smart money spends most of the time on a daily time frame, it is an example of following. It's an example of copying, right, to the best of our ability. And when you copy something, you tend to get the same results as something. If I'm copying somebody that's walking to the supermarket to buy something, it's very likely that I could also go to the supermarket and buy something. Why? Because I'm following someone that does that. Okay, so that's the one reason. The second reason, well, I forgot the second reason, but I'll make up one now. And it's low-key linked to the first reason, which is to follow smart money. The second reason is that our entry model is very simple to enter, in the sense that it's very straightforward. It's a set of rules you have to follow, and there's less interpretation. The daily time frame requires a bit more interpretation, in my opinion, because at the end of the day, you need to get into the mindset of somebody else that you cannot see or know, but you just know that they want to make money, and that alone is enough to say that I can analyze the markets. Because I'm not really analyzing the markets, you're analyzing people every time. That's my perspective. You're not analyzing price and time. Yes, you are. That's what you're drawing your ideas on. But at the end of the day, you're mostly analyzing people behind the price and time. You're analyzing retail traders, you're analyzing smart money, and you're trying to become almost the middleman. And middlemen can become rich. Look at Uber. I've not seen a single employee from Uber, and I don't count the Uber drivers as an employee. So the self-employed folks. But the idea is very simple, that with those folks, they in my opinion, they work for themselves. But the true corporation, they're hidden. But we know how they operate. We know that, okay, if we complain that, hey, my food came and it was the wrong order, they're going to give you your money back. Or if you ordered an Uber driver and your Uber driver, I don't know, is being rude to you, they're going to apologize, right? You don't need to see them to know what they will do in certain instances. So it's in that like mind that we know that they want to make money, so we can use the daily time frame to get into the mindset of what money is. And the daily time frame, it excuses the noise. It is liquidity and imbalances are the two things. Imbalance, liquidity, which is above old highs and lows. Now, I'm looking for equal highs and lows. Those are my favorite. And there is an indicator I did have for that. I'm not really seen any though. Wait, what's this line from? Oh, that's just today's high. Let's go take out the yesterday's high before the day before yesterday's high. So yeah, even with the indicator of the equal lows and highs and lows, it's not easy. I haven't seen any, basically. I like to use the hour time frame and above for equal highs and lows, because the hourly time frame is, in my opinion, stronger than the lower time frame. So it tends to be that which could hold more value. There is equal lows here, but we've swept that, took up here into this area of fair value up. Looks like price wants to drop from there. Personally, I would not be taking this. It's not really my style. It does make sense to enter or as an idea, but I don't like it because it's very subject. You can also go up to Asia's high, take it out. I like winning, surely, than I do potentially winning. So liquidity up here for Asia kills high, which is yesterday's high as well. This can be deleted. And I'm expecting, I just need displacement and then we can go from there. With EU, we are further behind because this one took out the weekly fair value gap. I think it was from here to here. We filled that in. And this daily fair value gap we've come up to. EU, however, though it has the same shape as GU, has only tagged in basically the weekly fair value gap. And the daily fair value gap left is still unchanged or unreached. So there is the idea of, okay, there is room for price to continue going up. So essentially, if DXY wants to now start going down again, GU will probably take out this fair value gap and probably go for liquidity instead. So that's why we need that displacement to the downside to confirm that, okay, this is now going to go down rather than target these areas of imbalances. GU is also more bullish than EU in the idea that GU, when it goes up faster. When it goes down, EU goes down faster, from my personal experience. And obviously, it's relative to the pair itself. So I was waiting for price to touch this last week. It almost did. Any which way. We just need confirmation, really. I think news will do it. With EU, it's a... If I'm looking for sells, I guess it can make sense. We have a swing high over here, which is at equal highs, which in truth is more so now a liquidity target than it is an area of resistance. Also, I don't like how this looks. Let's clean up a little bit. There we go. It's a bit better. And so price could easily target this. So we kind of have to be flexible in a way because DXY could drop. I think what's going to help is definitely going to be news, but we'll wait for New York Open before we have a decision. We'll make a decision. Again, we haven't seen strong displacement anyway, so we're going to wait for those interesting key levels to be taken out or tested, whatever, before we make a decision. So for that reason, I think we're going to come back at New York Open, which is in about over 2 hours. So silver bullet window is in 5 hours, which is actually when news. It's actually the same time as news. I just remembered, and obviously New York will start prepping from 1 o'clock. So 1300, 12, 1300. This is 1500. So 1 p.m. we'll start preparing, and then I don't think I'll start streaming at 1 p.m. I'll start streaming around 3, and then we will go from there. But in the meantime, I'm not going to trade right now, and then we'll see what happens in a couple hours. So appreciate you guys for tuning in. Your boy CJ, and I'll see you guys later today. Peace.